Hey, good afternoon, everybody. This is your market update for Tuesday, April 4th. So stock market this morning opened pretty much unchanged across the board, flat on the day. Unfortunately, started selling off the latter half of the morning. Currently, Dow is down 240 points, NASDAQ down 94, and S&P 500 currently down 30 points. I think after having several solid days in the stock market, maybe some investors are just pulling out some of their earnings. You'll see that from time to time after a few days of rallying in the markets. Mortgage-backed securities started off the day down 22 basis points, but then reversed course in a positive direction and are currently up 16 basis points. At one point in time, I think we're up about 23 basis points. So that's over a 40-point swing on the day, which is great for mortgage rates, great for interest rate pricing. I think at this point, we've actually broken above the 200-day moving average. If the mortgage-backed security market can close above that 200-day moving average, there's certainly some additional room for improvement above and beyond that. So we'll wait and see what happens. I think the mortgage-backed security market, their reversal was due to the JOLT report that came out. That's the job opening and labor turnover report. They came out this morning, which basically shows a softening labor market, which if you remember and watch past videos, that's something that the Federal Reserve has been looking at very strongly because that's one of the things that they were trying to accomplish by increasing the Fed funds rate to bring inflation numbers down, but it wasn't having much of an impact on the employment market. So the job opening and labor turnover report actually showed that there were 9.9 million job openings in the month of February, but that was below expectations of 10.4 million. So remember, we've got the ADP employment report that comes out tomorrow, and then the job report that comes out on Friday. So we'll be interested to see what those numbers show, if this is kind of a precursor to what we could see in those reports. If we do see that the employment market is softening some, the market will take that as giving the Federal Reserve just cause moving forward to pause potentially in any future Fed funds rate hikes, which would be good for the market. So we will wait and see. Also, good news for home prices. The CoreLogic Home Price Index came out and showed prices rose in February by 0.8%, which doesn't seem like a ton, but it's better than declining. Certainly, we're not seeing the month over month and year over year price increases that we were a year or two ago. Of course, that's hard to, it's not sustainable for long periods of time. But CoreLogic is also forecasting that home prices will rise again in the month of March by a minimal amount, only 0.2%, but again, heading in the right direction. And that over the course of the next 12 months, we should see somewhere around 3.7% appreciation in the marketplace, in the housing market, which again, is good news for the housing market. So we will continue to keep you updated. Tomorrow will be a big day with the ADP employment report. Again, Thursday, we've got initial jobless claims for last week, which is people filing unemployment claims for the first time. And then the big hitter on Friday will be the jobs report. So I hope that you have a great afternoon, and I will see you tomorrow.